Hi there, it's Mark Wickersham, and in this video I want to share with you something that we've learned from the world of behavioural economics, and that is why your clients really want to pay you up front, which is interesting because it's counterintuitive, it's not what we'd expect, and it's why historically the profession has given clients credit. We let clients pay us whenever they feel like it. 30 days after the accounts are done, 2 months after the tax returns are done. I don't know why we do it, because we're in the service industry, but we do. But what's interesting is your clients want to pay you up front. I'll explain why. But actually first, let's look at the benefits to you of switching from being paid after the event to being paid up front. Obvious ones, but it's worth pointing out. Firstly, of course, it improves your cash flow. When you get the money up front, you've got more money in your bank account. Makes sense, doesn't it? Also, it means that you can eliminate cash collection. If you think about the time we spend chasing money after we've done the work, it's incredible. We also eliminate bad debts. If we get paid before we start the work, then you've eliminated those bad debt write-offs forever. And I know that some firms of accountants have thousands on their bottom line coming off their profits as write-offs. Crazy. And if we can create recurring payments where the client pays you every single month the same amount, then it creates very predictable revenue streams for you. I know they're all obvious, but worth pointing out. But what's less obvious is the benefit to them of paying you up front. So here's 4 benefits. The first one is certainty. The very fact that they are paying you up front means that there is 100% certainty as to what the cost is going to be. And that's the problem with the old-fashioned method of pricing based on time and the number of hours you spend. They have no certainty, and everybody hates that. But here's a couple that you might not be familiar with, and these are things that we learn from the field of price psychology and behavioural economics, and the first one is called the saliency effect. And what that means is the greater the association of money coming out of our pocket, the greater the payment pain. So if your clients were to pay you by for example, cash at the end of the job, there's a high degree of payment pain because they can feel the money coming out of their pocket. If we were to instead let them pay by credit card, people don't see that. There's a breaking of the link between the physical payment pain and pay on card. We don't associate it quite the same, which is why we have escalating credit card debt. And so if we can have payment methods that they don't associate so much with cash coming out of our pocket, then that will reduce the payment pain and increase the willingness to pay. So certainly use credit cards, and even better still, I would suggest you use a recurring payment process. Now I'm going to come back to that and build on that because these 2 ideas are actually quite interlinked. Because the next idea is what's called the timing effect. And what they found in behavioural economics is that the bigger the gap between the date of making the payment and then enjoying the product or the service, the bigger that gap between the 2 things, the more customers enjoy the experience. I'll give you an example first. Let's think about the vacation industry, the holiday industry. When you go on your annual holiday, you typically book that well in advance and pay for it in advance, sometimes up to a year in advance. You might pay a deposit and then a few months later you pay the balance, but you've paid it all in advance. So what happens is you go on holiday and you sit around the pool or around the beach and you fully enjoy the experience without having to worry about the cost because the payment's been dealt with. It's all sorted. You've paid it. Imagine in contrast, what if the holiday industry changed it so that you paid on the last day of the holiday? Then what would happen is you'd be on holiday and the whole time you'd be fretting. At the back of your mind, there'd be this thought thinking, I've still got to pay for this. And of course, on the last day when you do pay for it, you think, crikey, that was quite expensive. I might wait before I think about booking next year's holiday because things are a bit tight now. And so it puts you off buying again. That's called the timing effect. And it's the same thing with any product or service. It's the same thing with your services, that if they have to pay for it afterwards, it creates a greater association of pain. And finally, the fourth idea is, this all comes together, is I would strongly recommend that you let the client pay by monthly recurring payment. Because what happens is it helps them to manage their cash flows. Most people prefer to do that. It impacts on timing and saliency. In terms of saliency, we don't have that association of payment pain. Because when you pay for something every month by recurring payment, you often don't see it. Unless you study your bank statements every single month, which most people don't. It goes under the radar, it's invisible, we don't see the payments coming out of our bank every single month. And so we just enjoy and benefit from the service without fretting about the payments. You've also got the timing aspect, because if they're paying for those in advance, particularly if you're offering an annual service like annual personal tax returns or annual financial statements, many firms I now work with are being paid for that up to a year in advance. They start the payments 12 months before the service is delivered. So you've got up to 12 months of timing, and because it's recurring payment, it's forgotten about. This is so powerful. If you want to find out more, I've got a free video training program for you, which is called A Systems Approach to Value Pricing. And somewhere below this video, perhaps above, but I think below, is a link where you can click on that now, register your free copy. Also, please tell me what you think. Go into the comments box and let me know your thoughts. If you're already doing this, if you're getting paid in advance and it's working for you, please tell me in the comments box. I'll see you on another video soon. Bye for now.